Alfred, what is your read on these markets right now?
Well, Ed, thank you for having me. Now, at Raise Capital, we are seeing an earliest investor in infrastructure companies like Databricks, Solana, and FTX. So when I saw Raise Capital's founder, Sam Bankman-Fried, in New York last week, we talked about how the crypto market was in much worse shape in 2019 as is compared to today when he first started FTX. So the growth stage and the late stage venture market may have been dampened, obviously, by the recent market crash. But we are seeing early stage deals staying very strong, I think because of a few reasons. Number one, seed funding is not tied to revenue. Market slowdown has very little impact to early stage founders. So when we invest, we look for a founder market fit.
Right.
Right. So, and most seed stage companies raise 18 to 24 months out runway to find that fit itself. Number two, IPO is not the only route to exit anymore. I mean, we look at the recent Adobe Figma $20 billion mega deal. We can see the next 2 years is going to be very strong in making. So that's cyclical. And three, venture capital investors are sitting on $162 billion of cash for new investments. So these dry powders are driving energy to find the best founder and a lot of early stage deals.
So what you're seeing is not risk aversion like we see in the public markets, like we see in the later stages. Are you guys ready to spend? You're ready to deploy capital, or are you sitting on the sidelines?
No, we are definitely not sitting on the sideline. We've been extremely active in investing. In fact, if you look at the cycle, post year 2000, post 2008, the very best, breakout company were invested soon after those crashes. Really good companies and strong founders, bubble up to the top, and then valuations are very rational. So you can make bets and be able to drive large ownership much easier. So this is definitely a good time.
You talked about valuations being rational. There's hundreds of startups out there, potentially more, with unicorn status, right? billion-dollar valuations. What's the risk that we see those valuations come down, that there's a major repricing of startups of a certain size?
Well, this happens in every cycle. So the late stage deal obviously will be highly impacted by the equity market and where it's going, because that's where people thought the liquidity would be. But now we're also seeing, going back to the Figma deal at $20 billion in size,
right?
That's as any IPO could possibly drive for investors along the way. So I'm actually not concerned, because tech's always needed, and we're about to see one major revolution of going decentralization through Web3 of the type of application that will emerge in the next generation. So very good time indeed.
They call you the Silicon Valley CEO's CEO. You were an early investor in a lot of names we now know, right? FTX, Solana. You founded and took public BEA Systems, right? Give me the founder's perspective. How hard is it right now to be a fledgling startup or a founder with an idea to sit in front of an investor and come away with some cash in your pocket?
Well, without a doubt, raising money is not quite like last year. And founder has to be really on the game to be able to have a story about how they will be able to generate revenue. So thank goodness the word revenue and cash flow matters again. So which is a crucial thing of running real businesses. So, and the other thing is, run rate and costs and expenses. We're seeing a slew of layoffs, mostly not because those companies cannot afford those people, but they're rethinking how to get to profitability and cash flow positive. So those are things I think is good discipline that we should be seeing good CEO driving great companies that will last a long, long time.
There are some areas I know that you have a keen interest in, Web3 being one. We talk about that in such big abstract terms, what will big tech do when it comes to Web3? Will they do anything at all when it comes to Web3? Do you think investors are starting to lose a bit of patience there?
Well, Web3 is much more cyclical than the regular market. So if you look at the cycle of Web3, it's pacing at about 3 years, because we saw the last crash in about 2019. We saw a crash in 2022. So if we look at regular cycles, about 8 to 10 years, Web3 cycle is about every 3 years. It's just showing the maturation of the technology is moving a lot faster than other cycles we have seen. Look at it. Like Amazon Web Services, AWS from Amazon, controls over 1/3 of Western world's internet infrastructure. Right? That really is unheard of. You have such, large concentrated control of the internet itself, and then you have the other two players, following them combined. They control almost all of the Western internet infrastructure itself. So decentralization of the internet is greatly needed. We have been frustrated with centralized social media control. So the only way to solve it is some of that have to be by technology. So this has to happen.
Hey, Alfred, before I let you go, let me draw on your experience. You've been through the tech bubble. You've been through economic ups and downs. How does what we're seeing now in the global economy compare to what you've seen before?
Well, they were scary at times. So in the 2000 bubble, we're all super early stage companies that were listed publicly and getting trashed, when they don't make earnings. And the market, have no escape because it's all publicly done. So when the rug got pulled under, it was over. In 2008, it was a financial crisis. We weren't even sure if our banking system was sound and was continue to be continued. Now this is very different. I believe, obviously, we have major issue in the world. We have inflation. We have rapidly rising interest rate, which caused the market to be retreating to the level they are. And now a T-bill is generating 4%. We're in a whole different world. So I think from that perspective, investment has to change. But from the tech perspective, we're going to see insanely remarkable productive applications in the next few years out. It'll be better than anything we've ever experienced. It's going to be a great time ahead.